Good afternoon, folks. How are you? Looks like I overslept. So I laid down. I was checking my phone out. I was looking at some reports overseas, and I was like, let me just close my eyes here for a second. You know how it is. And then about an hour and a half later, there you go, waking up past time. Okay, so it is what it is. Hope you're doing well. So we had a. Make sure I can hear myself. Yeah, I can see the subtitles here. As for the folks that are asking for the translation, the AI translation stuff that usually happens if I can do the shorter version of the videos. I was under the 1 hour mark this morning, and YouTube's server part behind the scenes says they're still working on translations. So I'm not sure what that's all about. But I saw one of the students post that they've been waiting 8 hours and it's still not there. Like I have any control over it. I don't have any control over it. I'm doing what I have to do now to make it happen, but just you got to give them time to do it. Give me one more second, real quick here. All right, we are doing it so professional today. Late, letting the dogs out, and then you want to sit there and give you a hard time and don't want to go out. They want to stay in with you. You've been taking a nap, Dad. We didn't know where you were. All right. So anyway, like I said, the translation stuff that it should resolve itself. But if it doesn't, I don't know what to tell you. I'm doing everything I can. If it doesn't work, yell at YouTube. All right. So daily charts. We'll go through dollar index. You can see we had pretty much a nothing day, and keeping in concert with this area here, as long as that price stays above that, we're looking for higher price. I'm looking for higher prices. Euro dollar. I'm going to spend most of my time on NQ, by the way. It's like the normal thing. We're going to go in the lower time frames on EU and pound. So the euro dollar here. So we have this bit of business. We're inside this sell side imbalance, buy side inefficiency right in here. And I want to see it kind of like make an attempt to get more animated to the downside. And there's a lot of things that could cause price to do that this week. We have Friday heavy news, CPI and then PPI, or vice versa. I can't remember which one it was, but either or. Friday and then Monday of next week, we have those big reports. So that's going to be impactful for all the markets. I'd like to see them, for instance, I'd like to see this market gravitate towards it like this, go a little bit lower than these relative equal lows. And it would be just like them to use Friday and then Monday to use it as fuel to get down below there. But as a caveat, when it comes to PPI and CPI numbers, if I were to take the data about where I think the market's going to go before those reports come out, admittedly, I don't have those two reports at a high degree of accuracy beforehand. But once the market gets that data and whatever the market's going to do with it, then I'm usually okay. I can find my way in the marketplace after that. But historically, and I've said this behind my paywall, and I've said it a few times out in the YouTube channel, um, my analysis going into those reports, and we're kind of like several days ahead of it now, so it gives me a little bit of room to kind of like expect certain things here. But whatever is in terms of the day, like CPI and PPI number, I'm generally not correct as what they're aiming for. So that's why I don't like to be ahead of the marketplace on those two data drivers. So I don't care about the data. I don't care where it's going to go. I'm just thankful it's going to go somewhere. And then after a few minutes, then I'll go in and I'll start looking for setups, any inefficiencies or pools of liquidity that have been left in its wake. That's what I use those report days for. Much like a FOMC rate announcement, we have a minutes report later this week sometime. I saw it in the economic calendar. I don't know exactly what day it was, but that's usually not all that impactful. So let's go into a 5-minute chart on euro. Take a look at this morning's price action. In London, we have price. Now, again, these red boxes here, that's those daily SIBIs on euro dollar. So in here, we traded up into it at the low end of it and then back down into a buy side imbalance, sell side inefficiency. Notice how this wick right here, when we have the inefficiency here and there's a wick like that, I've already taught you this year, when they're in close proximity, the wick is going to be the more salient PD array. It's going to be the one that the price is going to factor in more importance, more sensitivity. It's going to try to work inside the wick more than it will this buy side imbalance, sell side inefficiency. Okay. So if you were just simply looking at this as, oh, look, we have a run above here, and then we're going to trade down into this imbalance, and we can go long on that and not factor in this wick, you could get yourself in a little bit of trouble here because it could have used this wick more than it has over here. So watch what we do. See how it's using the octants? This is Forex, by the way. So it trades down in there, but it's overshooting the actual imbalance. See that? So whenever there's a wick, whether it be a discount wick like this or it's a premium wick, in other words, it's above the candlestick's body, and there's an imbalance there, if you're using stop loss placement and you're just simply saying, okay, well, I'm going to put a stop loss like right below the number 2 candle that creates the fair value gap, you're going to have to really consider that wick more because it can trade down into the upper half. And then that's where the sensitivity will manifest itself. So just toss that in there as a caveat. Price comes back inside that inefficiency, and look how fast it runs to consequent encouragement all the way to the high end of it, just outside of it here, and then starts using it. The red box, that's that lower SIBI on the daily chart for euro dollar. And then starts working its way back down, small little inefficiency here, mid-range, consequent encouragement, and back outside, takes a buy side here. And then this morning, nice sell-off there. Relative equal lows. And it moves into no man's land, just meandering around halfway point of that SIBI. You don't really appreciate those higher time frame inefficiencies until you draw down to lower time frames and see how they're really utilized. I'm going to rough eyeball it, just throw the levels on by eye only. So if it's off a little bit, just bear with me. You can do this on your own charts. I just want to get a feel for what it looks like here. You can see them using that octant a lot. Look at the bodies respecting that right in here too. That's probably random. Look at that. So it's probably no algorithm in there either. So it's probably just buying and selling pressure, clearly. The daily chart, again, it's this one. We were inside price action right here. We were in this price action, this SIBI, looking at that price action, running outside of a little bit, then back into the range. I was mentioning when we were doing the reviews and the commentary that we want to see it kind of like support the idea that if it can stay in the lower half of this SIBI, that's bearish, that's good. But if it starts, dropping bodies in the upper half here, then we're going to stay inside this range a little bit longer, which makes it very difficult to navigate for short-term trading. So short-term trading is what I was doing a lot when I was on baby pips, and then moved out of baby pips and did my own um, mentorship. I was doing short-term trading a lot then. These current conditions, I admittedly I don't have the courage to stay in something without watching it live. Too many things are happening. I just don't trust it, and too much manipulation. And I'd rather watch price action, day trade it, small little movements, staying inside of a session, not even trying to get the full daily range anymore. Like I've had to adapt to what the market climate is now. And I know some of you, and I said this before, when those conditions return, because in my opinion, they're not there. I mean, how are you going to comfortably hold on to a short term trade in all of, I mean, look at this wick here. Like I get it. I know what you want to do, and I kind of like want to do that too because my trading was one shot, one kill. I would look for a really good setup, try to nail the week high or low, and then try to run out the most portion as I can in terms of harvesting that weekly range and be done. And that way, my babysitting of the price action wouldn't be all that laborious. But it's not that kind of market right now. So for the folks that are saying, can I teach a little bit more about the short term trading and or one shot, one kill type that type of thing? When the market conditions are more conducive for that, that's my intention. But because it's not like that now, and these ranges are extremely volatile, they color outside the lines right now too much for that to be a model that I personally am comfortable with. Does it mean that those concepts won't work in the future when the market gets back into? Absolutely not. That's what's preventing those things from being utilized by me now. So because we have the volatility, because we have the uncertainty, because we have a lot of manipulation, we have drop of a hat type of events by our president, this, that, and the other thing gets tweeted, and they utilize that. So and you can see then they set the stage, they light the bomb, they blow it up, and then they capitalize on it. So I mean, there's no doubt about it's going on. And because I don't know what they have that they're going to release, and nobody else really does, you just got to be careful and go in and very strategically, surgically strike the market. Take your pound of flesh and get out. And that might sound like scared money. It may sound like schizophrenic trading. Okay, I call it winning. Okay, that's what it is. Knowing what you're looking for, taking that little cookie cutter shark approach where it's not trying to devour what it attacks to eat. It just goes over and punches a hole in it, takes a bite, and runs away and gets to survive. That's what you're supposed to be doing right now. That or simply don't do anything at all. So I did see your comments, and I am seeing a lot of other folks asking that as well in other videos. Can you talk more about the short-term trading stuff and how we can trade that right now? If I'm not willing to do it, why would I influence you to do it? That's kind of like what I'm standing on. That's the ground I'm standing on. So what I'm willing to do is what you see me covering in market commentary and in what I'm calling out live and then live streams. So we'll see if it can find its way lower and try to build some momentum on the downside. There's obviously there's very shallow run here. Didn't quite upset that enough. So they've built and established a small pool of liquidity for sell side there. So if it runs through that, it would need to kind of like use it as rocket fuel, like to propel it with much more momentum, not just simply go below it here, but to drive aggressively below that and attack that low there. Obviously, that's contingent on the dollar going higher, and I'm kind of like holding that idea for the short term. Pound dollar. Okay, we were able to stay off the high end of that wick for today, and it's a little bit bigger so I can see better. Old man eyes. So we failed to get the consequent encouragement of that inefficiency shown over here. So the buy side imbalance, sell side efficiency. That's good. Not seeing it trade to midpoint, that indicates usual heaviness. That means if the market's been going lower, this is indicative of a higher probability, not guarantee, higher probability that the market will continue moving lower. using the PD arrays, we want to see them kind of like support the underlying narrative that the current market direction is underway. Nothing's disturbed, even though someone looking at the market having an up close day like this would freak out and think, oh my goodness, it's probably reversed. This is the hardest lesson as a teacher to communicate to students because the willingness to hold on to something while you give back just a little bit when it's normal to give it back. If you're gonna like if for the folks who are asking for short-term trading or swing trading, if you can't weather an intraday retracement while still holding the idea that it's going to move in one direction or the other, but not abandoning that idea, you're going to have a real hard time adapting to short-term trading and or swing trading. So the benefit of learning what I teach is it helps you frame the understanding of why the market should be permitted to have a little bit of retracement into the range that it's just created. So that's the benefit of reading order flow the way I teach it, where it's not looking at numbers inside of a candlestick and saying how many buyers or sellers traded at that price versus the order flow that's seen in the ranges and the inefficiencies. Are we able to keep price below mean threshold of order blocks? Are we able to keep price below the mean threshold of not mean thresholds, I'm sorry, consequent correction of inefficiencies or gaps? And if we can do that, then that usually indicates that bearishness is being still supported. If those things start breaking and you see three PD arrays breaking their influence or kind of like submitting to price action, retracing against it, if three of them give up that strength that would support the underlying narrative for your price action directional call or draw, then that's usually warning signs that you're probably offside now, or you're about to have your trade turn against you. And depending upon your measure of conviction, you either reduce the trade significantly or close it. That's the protocol I teach. That's the protocol I utilize. So everything in here looks like it's still okay, and we'll see whether or not that's true or not going forward. All right. So pound dollar, we're gonna put the gradient levels actually on this candlestick's low and this candlestick's high. I tell you, live streaming the videos is a whole lot better for me. Usually I have to edit, and you're just gonna get the rough copies every time I do a live stream, so it is what it is. So any kind of sound, like my dogs are barking outside. I don't know if you hear it or not, but I'm not gonna worry about it because I really don't care. So, but as far as like editing and stuff, it really saves time. So I'm gonna continue doing it this way. Um, so we have the quadrant levels and the octant levels, and it's this candlestick's low, this candlestick's high, and now we're going to drop down into a lower time frame. We'll look at a 5-minute chart. Okay, and so I had buy side here, and again, this is pound dollar on a 5-minute chart. We used an octant level here. Look at the bodies respecting that. And again, this is forex. Okay, I have people already out there on the internet talking about how this stuff doesn't work in forex. It only works in index or indices. Well, I don't know what you're doing with it. I mean, you're obviously doing something incorrect with it, or you're demanding more than what it's you know releasing to you in terms of useful information. If you're trying to make it do more things than just simply calling out key levels to look for inefficiency or PD arrays to form at the right time of day, then clearly you're doing something wrong. Bear with me one second. These dogs are going crazy. I got to get them in here because they're distracting me. Girls are ornery, man. So anyway, we had a buy side liquidity pool over here. High probability relative equal highs. Why? Because the high to the left is slightly higher than to the right, and then it just kept going lower. So we have one of those nice, retail bull flags that failed them that try to use it. So they ran it up this morning around 10 o'clock hour. Give me a second here, Piper's. Hey, Piper. Hey, Piper. That's enough. You don't need to be doing all that. Okay, go lay down. Sitting there drinking. She's usually the quieter of the two when she's drinking. Scout's like a snow plow going in there and just lapping up and gets all over the place. Piper's just now trying to show herself and get on my nerves. Murphy's Law today, man. Whatever can go wrong with this live stream, it's happening right now. So just suck it up, okay? So buy sell liquidity pool over here. It runs through it. Look at the body stopping right there. Look at that level, okay? 0.625. That's an octant level. That's not a quadrant, okay? Bodies are showing sensitivity there. The wicks are allowed to do the damage. So that wick right there comes right back down. Do these candlestick bodies lay on that quadrant level? No, it doesn't. So what is that indicating? Listen, Forex traders, okay? It's telling you that they can't lay down on that. Even though we wick to it here and here, this is a signature. Okay, this is what you want to see by IPTA. You haven't said that word in a long time. It's like little hearts that showed up in your eyeballs, and it like, oh my goodness, he's talking our old language. The bodies fail to touch that, so that indicates it's probably going to make a run up, at the very minimum, into this wick. Okay, so it runs through consequent encroachment. We get a close above it, so that means it's going to do what? It's likely to take out that high. It runs through it there, but now watch, when it takes that high out, the bodies are staying under the wick high. That is turtle soup signature. It's not anywhere near a quadrant or an octant. It's just taking out that high. What is happening here? What's going on? Think PD array. What is occurring here? This level here to that level here. What midpoint is that? Event horizon. So you have a liquidity pool. It runs through that, but the bodies are gravitating towards event horizon. Do it for your own charts, not mine. I'm not going to draw it for you. This is your homework. From this level here to that level here, find the 50% level, and you'll see that the bodies are supporting that idea. The market drops down. This wick here, see that? Don't look at this as an inversion fair value gap possibility here to go like above it like it did here and come back down and use this as inversion to go higher. That's not what you're seeing these signatures tell you here. It's telling you that it's not likely to do that. It's likely to pull back into the range. Minimum criteria would be see this level here, and then what do you have here? Relative equal lows. Low to the right is slightly higher than that one, so that's a strong candidate. And it's on an actual key level. It's an octant, 87.5. It trades through it here. Then we start gyrating around that octant, and then the bodies come right back down to the low of that inefficiency on the daily chart on pound dollar. Bodies are laid here, trades up to that octant, comes back down in, event horizon. Look at the bodies in here. Rallies up and then starts just gyrating around that octant level. Look how it's just utilizing it and working towards event horizon between these two levels. Let's take a look at the crude oil market real quick. I'm just being real casual because, like I said, I'm a little disappointed in myself. I fell asleep, and that's something that's natural for a human being, but I didn't want to do that before doing a live stream. So I'm looking at these charts for the first time since they booked today. So that's that inefficiency we just had the levels graded on. And now we'll look at crude oil. I did not write a question down. I saw in the comment section for this morning's live stream, and I'm admittedly trying to remember what they were, and I don't want to toggle away from this and then mess up the stream. So just bear with me if I'm pausing. It's because I'm trying to remember what the person asked me about. I didn't write it down. I should have. So crude oil, we had a little bit of a messy day here, and we kept this inefficiency there in the form of a volume imbalance. So if you're a crude oil trader, you want to have this on your charts because they're going to use this. So we'll keep it gray, and then let's drop down into a 15-minute time frame for crude oil. You guys say oil or oil? Oil or oil? Some of you folks that are down south gonna say oil. We say oil. I ain't never put oil in my car. It's oil. You just gotta try to stir up some trouble all the time, you old man. No, I'm interested in what you all think. Now look at this. This looks a little problematic a little bit. I would prefer, even if it goes higher, which I think it's gonna go higher, I'd like for them to kind of like disrupt this little thing in here. Looks too clean. I'm not gonna draw any lines on it because I don't personally need to do that. But I would like to see them come down here and disrupt that. Even if it took this short term low and then reject that, that would be extremely bullish, really, really bullish, because that would upset any of the diagonal support uh, theories that are, traders like to look at that kind of stuff and use it for buying and selling. I would like to see it break that. And, well, let's just do it. I know some of you guys get what I'm trying to get at here. Let me take that extension stuff off. All right, so kind of like look at it like this. Uh, Oil Man ICT is bullish on crude oil, so that way we don't get it twisted. But I would like to see it come down aggressively and break this up a little bit. Okay. And then by doing so, what that would do is say I was making the market for crude oil. I would come down, break that there, and then you know what the retail is going to be looking for. They're going to be looking for a break and retest of the trend line to go short. Daddy wouldn't do that. I would take it lower, clean up these stops here, and go down just below this one. So this is, and again, this is just me, talking hypothetically. I'm not saying this is going to happen, but I would like to see it do it. So if it did something like that, take out the stops below here, it would disrupt the stops that's been trailed up for any longs. They would take those guys out, these for good measure, and then if it can reject that and go back up, in other words, if it trades down below the trend line, the people that look at trend line support are going to be upset by that. And the folks that said, I'm glad I didn't use that trend line to get long, they're going to wait for it to come back up and touch the low of it. Go look at John Murphy's technical analysis of the financial markets. Every retail trader thinks like that book teaches. Okay. And they would be looking for that type of scenario. But then what I would do is I would ram that thing straight on up and start taking out higher highs and just keep running with it. So I would smoke everybody. So in that situation where we're at here in the economic climate around this particular market, it's event driven. So I would be looking for a lot of shenanigans, a lot of manipulation. And this is just one that just jumped in my mind as I looked at the price action on the lower time frame, 15-minute time frame chart. It doesn't need to do this. It could just keep on going higher. But me personally, I would love to see it disrupt this, come down, stop people out, and reject, give them a bait for going short on a trend line break and retest, and don't give it to them. Just rip their face right off and send it higher. Wow, dude, you're really violent. I thought you were a Christian. It's war out here, yo. So we have higher prices in order for crude oil, I think. It's very tricky for like doing short term trading. It's one of those things where you just you don't know where they're going to rip it to take stops, and the hot button right now in the marketplace and news related stuff is all it's Iran. Iran this, Iran that, and that's oil. So just if you're going to trade this, just expect to get slapped around a little bit or hurt. That's why I'm telling you, watch it, observe that it's probably going to keep going higher, but I wouldn't personally try to inspire you to take any positions in it because I could be wrong. I could absolutely be wrong. Gold. I had a. That's the question. It just jumped in my head. They were asking what broker do I use when I'm trading or not trading, but charting gold because I'm not doing anything with gold. I don't want you thinking I'm trading it short or long. I'm not doing anything. I'm not in the options market with it. Nothing. I have hold nothing in gold right now except for the physical stuff, and it's not sitting somewhere. Okay, they're not holding my gold. So the gold futures contract price chart I just simply go to GC and where it says right here, I'm choosing that one. When I click on that, it's going to the default continuous contract. I'm doing all my analysis on this one here. Okay. So today we had a kind of like an indecisive day there too. And it's showing a lot of intraday annotations. It's bleeding through. I haven't done a good job of keeping those things toggled right because I'm not spending a whole lot of time in this market. So when I'm doing intraday stuff and pointing out stuff to Caden, I don't care if it bleeds onto the daily chart because I don't plan to do too much conversation about it because someone just asked me about which one do I use. That's why I'm pulling up gold again. And everything stays true to lower prices on gold or consolidation as long as we're below here. If it gets back above that, then I told you, like I said this morning, I would expect these two positions, not positions, these PDA rays to support the idea of a bullish position before I would look for anything going long. I just don't trust the market at all. And make it real simple, real short and sweet. Same thing with silver. I don't trust it, but if it wants to go above these two levels here, then and only then would I expect it to go higher. So I would expect it to give a lot of ground up first before I would be convinced it's going to likely go higher. Even though I have no opinion as to where it should go right now. Um, I wanted to see these levels taken out here. I might not get that, but I got a lot of this before it happened, and this movement here. All that was outlined before the fact, and you can find it on my YouTube channel. And before all this run up here, we were talking about it in Trader Roundup spaces and my own Twitter spaces when I was doing them. So it is what it is. But now, because everybody wants to, anticipate another new run, a new price leg in these two markets, that's when the professionals take their hands off of it and they rotate out of this into other markets like crude oil or other commodity markets because other commodity markets are going to be hot. What commodity markets am I talking about? I believe that the grain markets going into this fall, late summer, fall months, I think are going to be bullish, and that's why I'm only keeping a dollar target to a very modest upside target. I'm not looking for a higher dollar like a lot, only to that daily. I mean, now that I'm talking about it, make sure I'm showing you what I'm thinking about, but you've seen me comment before. This is all I expect on a firmer dollar. So I don't have much of an upside target for dollar. And the reason why I'm only focusing here, and I know this is the boring stuff that a lot of people don't like to hear about, but this is what makes me have the analysis as good as it is, not bragging, but it's the thought process, it's the why I'm doing something, why what am I referring to, what made me think that way. Those types of questions I actually have a lot of respect for. That's a student that is, in my opinion, after my own heart because it's not just simply this down closed candle at this time should cause price to go up. Why should it do that? What's the mechanics behind it? I need to know why. As a little boy, I took things apart, not because I want to be destructive, but I want to know why they worked. So I don't have faith in like black box systems. And someone buys an indicator based system that just generates things to me that is extremely lazy and it is makes no sense to me because you don't know what's going on underneath the hood that make those signals generate. And you might say, well, I don't need to know that because it does this. Well, that's you. But I'm not going to put my money. You might as well just go play lottery because the same outcome is just as random as you trusting something someone coded for you. And I know there's students of mine that are coding stuff, and I'm not going to change what I just said. I'm not going to bite my tongue. I am a purist. I am a high touch over high tech. because I know I'm going to outperform any computer stuff out there in the marketplace. I don't care what anybody says. And I'm out here for it. Bring it. I'll trade your black box bullshit. I can do it. No problem. So having a very neutered upside objective, it's because I think that because we're having issues with fertilizer, we're having issues with supply shock that's going to come later in the year. I think all those things are going to lead to an issue with our grain markets like corn, soybean, wheat, oats, um, all those types of agricultural markets, I think are going to be hit again. And it's going to be an issue with that stuff. So I'm going to be looking as we go closer into the spring months and into the early months of summer. I'm going to be studying these markets in my own private study. And if I find something that's noteworthy, worth mentioning, then obviously I'll tweet about it or whatever. But I'm kind of preparing myself for a strong bull market in the grains because of all the things that are happening in other countries. They're not um, exporting the main ingredient for fertilizer. So if there's a short supply of that, that's going to have a negative impact on our agricultural markets in the U.S. So it's just kind of like a warning sign to start looking for evidences that these things are in fact happening. So what do you think would happen if the corn market, the soybean market, and the wheat market starts showing bullish PD arrays after it takes out a pool of sell side liquidity? Then it's probably starting its run. And then by watching the premium markets form, and what I mean by that is watching the carrying charge versus the next month out, front month to next month out delivery months. If the nearby contracts start having a higher closing price or right now mark to market price than the next month out, that's a reverse of normal carrying charge market for agricultural market. Usually it's more expensive in the future. So for instance, whatever the contract is for right now for wheat, the next month after that one, when this front month would expire, the next one out should be trading at a higher price. That's a normal carrying charge market. But when they reverse and we have contango, it's a reversal of that normalcy. And that reversal indicates a real supply and demand factor. It means that there's a lot of demand for it because they're willing to pay a higher price at the new front month than they are with the next month out. So if we start watching the grain markets form these premiums in the nearby versus the next month out or distant months out, what we're seeing is the big conglomerate users of fertilizers and or those grains, they are already hedging in future higher prices. They're not going to risk you know their big business on whether or not it might or might it's going to be them pouring into these markets. And that's where I think the next potential big mega trades will occur. So we're using real world events, cultural shocks and supply shocks that are happening around the world, and they're going to have impacts to our markets. And you might say, well, that doesn't bother me because I don't care about that and I don't trade that. But you eat, don't you? You eat bread. Do you have a farm? Do you feed your farm animals these things? Corn, like corn fed beef. Think about it now. All these things come together. It's to me, it's just silly when I see these people. It's usually foreign students that really don't have a whole lot of IQ in terms of financial markets. They're just so social media oriented to just think that it has nothing to do with them. Just give me where you think the market's going to go next for crypto, and you're not eating the Bitcoin, okay? But grain markets are real markets. Okay, they have a real value. They're always going to have value. Bitcoin's eventually going to go to zero. Corn ain't never going to go to zero. Wheat is never going to go to zero. Soybeans is never going to go to zero. Okay. So these are real grocery store items. They're always going to have a value. Okay. So that's what I'm watching. And that's why I have a very neutered upside objective on dollar, because if the if the commodity markets are likely to go higher, because of the situation that's outlined. And this is very far out. This is like 6 to 9 months up to a year away type things. So because they're very broad macro time frame, not macro time frame, large big picture perspectives, they're not, let me get into them right now. It gives you time. There's no rush to get into those types of moves, but you want to start studying them and looking for evidences that they're possibly forming that very thing. So if those markets are likely to go higher, extrapolating to the higher end upside, then dollar will have a very hard time going higher because commodities up, dollar down. But in this case, we might see just simply, it might take my target here, if it even goes there at all, because I could be wrong, but that's why I'm only looking for this. And my objective for euro dollar and cable or pound dollar, it's kind of very short term too, because of what I just outlined with the fertilizer and the shocks that's probably going to come our way in the US with growing crops. And those crops are going to impact meat prices. And all of it's going to just go through the whole agricultural market, and it's eventually going to hit you in your grocery store. When I was talking about this in my paid mentorship in 2019, 2020, I had students literally saying, you know, and they were all foreign students too, by the way. They were all saying to me, like, I don't care about this. Can we just talk about Forex? And I'm like, no, because what you're about to see, which was COVID, which look at your meat prices. I told my students then, I said, you think that your meat prices are expensive right now. You have no idea. It's not going to stop. Well, let me just show you. Here's live cattle. Let's look at it on a weekly chart. In 2020, March, I told my students right here, I said, this is, it's going to go up. I mean, you think you enjoy a steak at a restaurant right now and all that stuff, it's going to get really, really expensive and it's not going to stop. And if I had said anything short of that, if you're a charter member student, come out and say, and you can take the video, slice it up, upload it on social media and say, ICT is a effing liar. This is what he said. You all have my permission to do that. Okay. You all have my permission to do it. But you will never see that clip because it didn't happen. I said what I just said here. Meat prices are going to go straight through the roof. And I had students literally crying to me in emails, complaining that I'm spending too much time on markets they don't trade. Well, what does it cost for you to get a pound of ground beef right now? For the people that were young saying, I don't care about that, I don't care about that, you probably live with your mother and your father's paying for the groceries you're eating off of. Okay. You don't even pay room and board where you're living at. But yet you're going to talk to me at that time in 2020 about why it's not important. Look where it's at now. I guarantee you every adult that's in this live stream right now that lives in the United States, I don't know what what these beef prices mean for anyone else outside the US, but in the United States, we're paying a lot of money for ground beef, for steaks. Go to the store and try to get yourself a nice steak. Go to a restaurant. What's it cost you to get a steak there? You're paying Wagyu prices. Before Wagyu prices, got to this level, you're paying for it now, just for common meat. So I guess what I'm saying is it's really important for a lot of you to have these entitlement-minded perspectives, and I'm talking about things that are pertinent. I'm not wasting my time. I certainly am not wasting my time. But I told my students behind the paywall in private mentorship, okay, they're the only ones that were supposed to be hearing these things. And for the people that were leaking it and selling it, those people that bought those leaked versions of it, you all heard the same stuff. You heard me say these things. So that was the low in March for most of the commodity markets. And I don't think we're done with this. They're just simply going to take it higher because they don't want you having meat. Okay. They don't want you having it. And I got a lot of people behind the paywall coming at me saying, you're too conspiratorial. You're too tinfoil hat. We didn't pay for this. Well, what are you talking about? You didn't pay for this. You paid for me to tell you where the market's going to go, why it's going to go there, and how you can duplicate that using the same logic I'm using when I'm doing it real time. And then you see it. And then it's affecting your grocery bill. I guarantee you, everybody in the United States that quit my mentorship back then, because I was talking about how aliens are going to be starting being used in the narrative. Literally, people literally say, "That's it, I'm done. I'm tapping out. You're a nut job." And then in March, they came out and said that, "Oh yeah, by the way, aliens are real. Here's the footage, and it's U.S. military footage, UAPs." They started calling them. And now all you do is keep hearing about this stuff. And now Matt Gaetz comes out and says, "Oh yeah, by the way, they're abducting people, and then they're taking them to this place where, alien life forms are having intercourse with them, so that way they can procreate and cross hybrid." That's coming out of a senator's mouth. And then another senator is coming out and saying, "Yeah, I can't say it right now because I'm a active senator, but the things I've seen, it would keep you up at night." And yeah, it's crazy town stuff. Does that sound like normal to you? Those are all the things I was saying ahead of time. I said in 2019, July of 2019, in October of 2019, I was the only one talking about that stuff. Before every YouTuber that talks about this stuff now, mm-mm, I was talking about it. And I was getting, yeah, I was getting laughed at. I was chicken little this, chicken little that. You keep saying this stuff, you say it's this and say it's that. All the influencers that talked to me and try to troll and stuff, you feel less of it because you have affiliate marketing stuff going on. If you didn't have that affiliate marketing stuff right now, you'd be crying the blues how expensive everything is. So you're sheltered a little bit because you're fleecing a lot of people's stupidity and gambling. But for the average person who I was talking to, the ones that prepared their house, it helped mitigate a lot of the costs. And when we had the lockdowns come our way, it was not as impactful negatively to those individuals that were listening to me. Other people bought a whole bunch of stuff they don't even eat and then complained it expired. Canned goods don't expire like that. If I had a canned good in my house that was 8 years old, I would still eat it. It may not taste as good as it was the first year it was canned, but it's not going to kill you. As long as there's no swelling or anything like that, no leakage, I'm eating it. I'm going to eat it. I'm not going to starve. And that's the mindset of people. Oh, the expiration date says this. Your medications don't expire either. It's a myth. It's for you to buy more of it. Everything in this world is completely a lie. And if you don't think outside the box and think differently than what they have been teaching you since grade school, to just trust what they say, do you still trust the science? You've seen what they just put us through 6 years ago, and now look what's coming out. Look what's coming out. Everything that every conspiracy said, this is what it's probably doing, or what it's going to do to us if we consume it. It's all coming out as fact. And they're not protecting us still. They're still letting it happen. And you want to trust them? And when someone comes forward and tells you, this is what's going to happen, and it starts happening, and then they say, you're crazy because it upsets their normalcy bias. I had lots of people that wanted to come back into the fold when it started hitting deep. And it was simply no. So I'm glad I don't have that barrier anymore. I can just tell you what I feel and what I feel led to say. But I can tell you this: COVID was it was a dry run. It was to see what they have to do for people that don't want to comply. Most of you guys complied. Most of you got that jab. Most of you did what they told you to do: wear a mask, stay 6 feet apart, don't see your family, don't go to church. I didn't do those things. I didn't do it. I just told my wife, I said, look, you're welcome to do whatever you want to do. Okay. If you feel scared, you do what you feel is necessary for you. But I'm going to still go wherever I want to go. I'm going to do what I'm going to do. I'm going to go to relatives' houses. I'm going to hang out. I don't care. I'm not worried about it. Um, the, the, the concern for products being mailed to me, I took a little bit of extra precautions there. I sanitized some things that were shipped to me just in the event that, maybe I was wrong, but I was not driving around in my car with a mask on. And people are still doing that today. My saying this is the real thing's coming and it's going to be far worse. Okay. It's going to be extremely difficult to accept when it starts happening. But when it happens, it's going to be very fast. It's going to be sudden. And I'm not going to have the answers for you. I'm not going to be able to help you market wise because we'll probably be in an environment where price won't make sense, even in my eyes. So until that happens, you just work towards building the skill and try to make it useful for you. Some of you listening, you're looking for any reason why just don't even bother with it. If that's your mentality, please don't write to me. I don't care because you're showing that you aren't prepared at all. And before you prepare yourself to trade, you should prepare your own house. Get yourself stuff for you know, the emergencies. I mean, that's the only thing I can tell you because something worse than COVID's coming. It's going to be hard on everybody, even me. My money will not help me. My affluence will not help me. So I don't place my trust in that. Okay. So that's why I have that secondary Berean study um, YouTube channel. That's why I don't get scared. That's why I'm not nervous about any of this stuff. And I expect more of it. So there's your Twitter space rant for today. So let's take a look at MES. You going ICT? No, shut up. You're scaring me. Stop sowing fear. It ain't fear. It's preparedness. All right, so this is it's a weekly chart. Go into a daily. All right, so we have this candlestick's low in this small little volume imbalance right there, extended over. I mentioned if we get a little bit of a push. Now, like I can't predict the future. Like I don't know what these guys are doing over in the Middle East. I don't know what the people in our war room in DC or coordinating or implementing. I don't pretend to know all that stuff. I don't. But if we get anything that would be viewed as a opportunity to send it higher, you want to be paying attention to this area here. If it trades up into that and trades above it, it could act as an inversion, then send us up into this liquidity there. As I said numerous times now, I said it this morning, I said it, in Twitter Spaces and Trader Roundups, which is the Twitter space that's held by Kit. Every time I usually do a live stream or whatnot or a lecture, they open up for a community, come to Jesus meeting where we all share observations, hardships, what we do to get through things. And I mentioned how in May, um, Trump's buddy is supposed to be taking over as Fed chair. And when that happens, I think we're going to probably see even more exaggerations in the marketplace. So um, it's not going to be an easy year. Let's say it that way. Okay. 2026 is probably going to be in my journals when I close it in December 31st. If the Lord allows me still to be here, I'm going to be writing something to the effect of this was the most difficult trading year of my entire career. So I'm preparing for that. I expect that to be the case this year. So if I'm expecting that with more than 3 decades experience and you watch me calling these things live, if I'm telling you it's difficult now and it's going to get even more difficult, why would you expect it to be easy? I'm not trying to say I'm better than everybody in that respect. I'm just saying that people with a lot more experience are preparing for hardships. Okay. And it would be very arrogant on your part to assume that you think you know more than people that have been doing it and making millions of dollars for a long, long time. but you now suddenly know more. The ability to get in these markets and the barrier of entry is so low that the average person, just because they have a little bit of money, they can come into them and they can do things that make no sense, but somehow make money. And that happenstance, that coincidence, because that's what it is when you're brand new, and I experienced this, it tricks you into thinking that you know something you really don't. And that's a dangerous cocktail right now. If you're mixing that drink and sipping it back and thinking you're having a wonderful time, mm-mm, because happy hour's about to end. And people that get drunk on no skill, but thinking they've cracked the code and they know something that they really don't, are going to find very hard markets to be trading. This year is like a make it or break it. Okay. And admittedly, I'm going to come out and just say it here. If what I think is coming and starts materializing, and I'll only post this on X, okay? I'll tell you if this is exactly what I anticipate coming. I'll say, I'm done. And if I simply post that on X, then I have retired and I will never step foot in the marketplace again because I think that everything has shifted to not worth it. Let's put it that way. Okay. But until I do that, you should actively try to pursue whatever you can with these concepts, with these markets, with these opportunities. But just know that we're going to be met with very difficult market conditions. Very difficult, and a lot of manipulation, a lot of fake price runs that were artificial. They're absolutely engineered, and there's nothing you can do about it. There's nothing I can do about it. You either elect to be a participant in it or remove yourself from the risk and say, I have other things I can do, and I'm just going to wait and see what happens. And protect whatever money you have. Don't risk it. Don't gamble it, because the type of market moves that are going to most likely occur are going to be violent. Violent. Like 1 minute you're here, and the next you're insolvent. That means that you have less than you put in your account. That's the kind of moves that I anticipate coming. And I don't want to be a part of those. I don't want to be hurt by those. And because I know that that is a probability, this global climate that we're entering, it is very serious. It's very, it should be very sobering. And if you're brand new and you're young, you don't see the effects and the weight of risk right now. You just see the upside. What if I make a lot of money? What if you hurt yourself? Now, if you're in these prop firms, you know, disregard everything I just said, because the worst thing that can happen is you lost that fake paid demo account. But if you're trading with real money, you can get wrecked beyond what you could ever reasonably pay back. That's the kind of risk that we're entering right now. Warren Buffett trimmed his holdings to his largest cash holding ever. Does he have a couple stocks? I had a couple people come back and say, "Yeah, Warren Buffett says he's holding. He just bought some shares." Of course, they're going to put that out there because it makes it like, oh, he still trades. He still invests a little bit. Why is he in that largest cash position ever? Because he knows something you don't, and he has money that he doesn't want to lose. Everybody else just says, well, it's lottery time. It's a trading day. Every day is a trading day. Okay. Yeah. These same jokers are going to be insolvent by the end of the year. Trust me when I tell you that. But that point is, there's a whole lot more than simply just looking at a candlestick in the time of day and thinking, oh, it's so easy. A caveman can do it. We're entering a very challenging period. We're entering a time when previous experience may not afford you the luxury of escaping significant drawdown. And that's, in my opinion, what most of these influencers should be aware of when they're talking to their audience. Just go, 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 LFG, okay? It's all get in there and let's make some money. Nobody is talking about risk right now but me. No one's talking about dialing it back but me. And that's concerning to me. Like, that's very concerning. And that just really exasperates the level of urgency to make sure that you don't fall victim to what could potentially happen. Now, what happens if it doesn't happen? Did you lose any money? Probably won't lose a lot. You might miss a few moves because I'm telling you to be careful. Anyone worth their salt with real experience, not fly by night, I just started trading and I just started being able to take some withdrawals. Now all of a sudden they're going to counsel everybody how to make money. They want to teach you. Look at their bios and their X feeds or profiles, teaching other people how to trade professionally. And you go back in their timeline, just started becoming profitable. This is my third payout. This is my third withdrawal. Now they're going to teach you how to be a professional trader. And they have a mentorship. Join now. Oh man, it's crazy. It's crazy. But these people on social media see that and they say, "Oh, he got a payout. She got a payout." Well, that's what I want to do. Let me join their stuff because I want to have that payout too. And none of them have any understanding of real risk. They have no understanding of what's coming. Okay, because it's all upside. They're so low at the bottom of the barrel. It's the only thing they can see is the upside. But their audience members, the people that they're influencing, may have more to lose than them themselves. And truth be told, most of these people online that are pretending to be know-it-alls, largely they're broke. So again, I just want to be the voice of reason. I don't want any of you getting hurt. Okay. I want to be wrong about everything I just said. I want to be wrong. And I want everybody to come back to me a year and a half later and say, you know what? Remember when you were doing that live stream? Remember when you were talking about all those things that you thought was going to happen and it never happened? Ha ha ha. You goober. Man, I want that to happen. I want that to happen because 99% of you will not be able to afford what's coming. It's going to get bad. It's going to get ugly. It's going to be scary for a lot of you because you didn't prepare. You don't listen to these types of messages and you think, well, that has nothing to do with me. It has nothing to do with me. And that's the same thing that people said in March 2020 and online in 2019. They said the same things in 2016 before Trump was elected when I said he was going to be the fall guy. Look what's going on. Come on, let's hear about it, Mega. Come on, let's hear about it. What's your boy doing right now? Do you still believe in all that QAnon crap? I told everybody that was a psyop. I told everybody it was a psyop. And I had people literally coming, wanting to chest up to me saying, "Man, you don't know nothing, blah, blah, blah." Okay. What's your boy doing right now? Everything a president shouldn't be doing. Hmm? Where's all the rescue team coming in to get everybody arrested and rounded up? It's not happening, is it? So, again, back then I wanted to be wrong. I wasn't. 2016, I was not wrong. I was right. I wanted to be wrong. 2020 and 2019, I wanted to be wrong. I wasn't. And what's coming now is worse than all that stuff. And instead of trying to make flash in the pan money to buy cars that nobody gives a crap about after you've been seen driving them, and you have these exorbitant costs of having them, it's going to feel stupid that you wasted so much time and energy and money to get something nobody cares about anymore. I can tell you, driving very expensive cars, owning very expensive things, all of that stuff doesn't feel as good as you want it to feel. Before you get it, You think if I get that, it's going to give me happiness, it's going to make me feel fulfilled, and everybody wants to be like me, and I want to feel significant. And then when you get it, you show it off to everybody you know, and you might hear them say, "Wow, I wish I had that. Oh, can I take a ride in that? Can you let me drive it?" Once that happens, it's over. Nobody cares. Nobody gives a crap about what you spent on it. But now you're stuck with nobody cares about it. And the luster is worn off. And now I have to pay all this to upkeep the insurance, the cost, and the concern about it getting damaged because you can't just leave a supercar in a parking lot. You just can't do it. People are going to come around, they're going to take pictures, they're going to lean on it, lay up against it. And the average person that doesn't like people that do well will harm it, scratch it up, do something to it because they're jealous. And these are all the things you don't think about before getting these toys that you work so hard to get. I promise you, none of that stuff is going to fulfill you. It never fulfills you. But having a peace of mind knowing that you don't have to go to work or you can afford $10 a gallon gas, because I can tell you, it can go to $25 a gallon. I don't care. I'm still driving my Corvettes. I'm still driving my 8-cylinder pickup trucks. I'm still going to do everything I'm going to do, and I'm not going to stop doing it because of whatever gas is. I don't care because I can afford that type of stuff. It gives me peace of mind knowing I can do that. I don't sweat that stuff. Now, when I watch the pump go up and I'm filling my cars up, I'm thinking of all of you that are just starting and how this is very difficult for all of you. And trying to place myself in that situation where, man, if I can go back in time, 1992, gas wasn't this expensive. Groceries were not this expensive. Rent, mortgages, home prices, they were not like they are today. You are being met with considerable challenges. And for some of you, you think that, well, it's going to be a hop, skip, and a jump, and it's going to be easy for me to get there. I don't think it's going to be easy for you to get there. There's a lot of things to weigh out. There's a lot of things that's going to cause doubt, fear, anxiety. It's going to be hard to hold on to trades because of all the stuff we have seen already, and it's going to get worse. So try not to listen to all these other influencers and think that it's just going to happen for you easy and that you shouldn't have anything to worry about. You should worry about losing more than you have. And if you manage your trades like that, you won't over leverage and you won't overtrade. You have to be able to manage yourself because if you're not doing that in this type of market, yeah, you won't be around. And what evidence are you presenting to yourself that you're going to be that reckless? Every day is not a trading day now. You need to be cherry picking the best setups, the best environments, and only operate in them. If there isn't a significant influence over you deciding whether you're going to trade that market based on your studies, your model, the confluences you like to look for, demand a lot of them. And that might mean you only get one trade a week. You know what you're going to be doing? You're going to be preparing far better for the downside than everybody else. Because I promise you this, you're going to hear so many sob stories by the end of this year of how many people blew it. Man, this was so hard. I was doing so well. I had a lot of hopes in myself, but I blew it. This is a blowout year, and that doesn't mean it's a good thing. This market is consuming accounts, blowing out people every single day. And you need to be reminded of that. And I don't mind being the bearer of bad news because it's common sense. It's practical information that you need to be considering when you look at these markets. Hey, there's real risk here. There's real risk. And they can traverse from one price to the next so fast that your stop loss will not help you if you're even using one. So I felt led to say all that stuff. And if I've bored you, if I've brought you down or depressed you, good. Because there has to be some reality in this stuff, okay? Because there's too much bull crap being promoted on social media and on YouTube. Everybody's rich. Everybody's making millions of dollars. Where's the mansions at? Where's the mansions? Okay? Because if they're talking to you from an apartment, that's probably not somebody you want to take financial advice from. So, and they got to have some furniture in their house too. What's that knife? What's that? So, I expect this to potentially be drawn up into. So we'll see if we get that. Obviously, going into this week further. Let's look at YMY mini Dow, and if this one gets a little bit of a lift, you see this volume imbalance right here. I'm asking like I'm going to hear you say yes. See, it's just like I'm talking to you like you're in the same room with me. That's how it is around here. That's why I love listening to you, ICT. It's like you're talking to me. That's good. That means I got a good aim. I'm talking to you. So this imbalance here, if it gets back above that, it could act as inversion too, and then maybe run for the buy side there. Um, we've dug down, pretty good for this indice, and usually it does a little bit of its own thing. It's unruly. So just have that in mind. If we get it back above this on a closing basis, if it can defend and stay in the upper half with the bodies and not trade in the lower half, that would be inversion. And then we would see it potentially reach for this area up here. I like this one because it's also got a gap and the wick. So it's buy side, fair value gap, but look to the left. Why? Because that wick takes precedence over that fair value gap right here. So this is what you would be looking for. There it is, graded, consequent encroachment, octant, upper quadrant. So upper quadrant here would take buy side. It would allow for a little bit of fluff movement outside of this gap here. You got to include that volume of balance. But that low, that candlestick, it could color outside that and still utilize this upper portion of the wick. But that level right there, if we get this type of scenario, I would look for that level right there. So you can time and date stamp that commentary. Write that down in your journal, because if it happens, then you can say, well, I watched that happen. If it doesn't do this very thing I'm talking about here and just rolls from here over and goes lower, then disregard any of this stuff. It just has to happen with this here. It needs to jump through it, close above it, and then start working its way back down in and leave the bodies in the upper half, not lay a body in the lower half. Then what I just said would be a potential scenario for um, the Dow. All right, so let's go into MNQ. We can wrap this thing up. Been a little bit longer than I should have, but whatever. I feel guilty because I took a nap too long. I feel like I owe you something. I don't owe you anything, by the way. So um, intraday stuff. That's the opening range gap that's being graded. So let me start by going into the 1 minute chart, and we'll come back out to the daily. Look at that price action. Doesn't that make you feel like you want to trade it? Do you think they're expecting something? Yeah. So look at that. Oh my goodness. Look at that. That's almost like randomness, isn't it? Look, if I would have had this drawn out beforehand, like if I would have showed you this level before it reacted there, before it really used it, if I would have been smart enough to do that beforehand, like if I was doing that live stream this morning and I would have drew this out before, man, you probably all would be impressed by that. You probably would say, ICT, wow, look at that, bro, you're the goat. I would probably get all these comments talking about how these concepts are so awesome, but one can dream, right? That we could all just look for it. things like that in the future. Be optimistic, right, ICT? Be optimistic. He's so sarcastic. He loves talking. So we're gonna go over here. Over here, we have electronic trading hours on. Why does that look like that? What's up with that? Hmm. Mini contract real quick. And then Q back on. Yeah, I don't know what's going on there. All right, do me a favor. I know some of you are watching live because there's a little bit of audience watching right now. For those that know a little bit more about trading view management than I do, I know there's a hotkey type thing that you can do to refresh the chart. Could you be so kind to go over to X and tell me what that is right now? Is that way I can do it? 'Cause I think that's what's going on. I think TradingView is giving me a glitch and it can be repaired by them refreshing it. So I'm on X now waiting for one of you guys to tell me what it is. Bitcoin. We're not supposed to be looking at that right now. Okay. Okay, it's MNQ. All right. Thank you, Nard. Thank you for that. Control R, by the way. That's what I was told. So now TradingView can probably look at my screen at all times now. I'm being facetious. So the idea of using the wicks I mentioned earlier today when we were trading down here. Before I closed the stream out, I said I would like to see it trade not this candle here, but the next candle and the next candle after that. I would demand that it would go lower and start to sell off. But we were seeing challenging price action with this wick. Okay, so let's look at it like this. And you'll see two barriers on the upside and the downside. Okay, and originally as I drew that out, I believe it was red, not because it's significant in that color, but it kind of looked like this. Okay, so I had something like that going on. It was challenging that. And then you can see price went all the way back up through first percent fair value gap and up into this area here. So what is this? It's the same thing, just the opposing side of it. See that wick? Let me broaden it up. That wick right there. So having that highlighted there, that wick is an inefficiency. It doesn't look like an inefficiency because this wick goes all the way down here and this one starts here and then there it is. So by having that wick highlighted, it helps you formulate a range the same way an inefficiency like a SIBI or a BISI would be, or an NWOG, or a new day opening gap, or a new week opening gap, or opening range gap, regular trading hours opening range gap. Those types of inefficiencies. So you can see the halfway point. See that little gray line right there? That gray line is actually part of the imbalance I showed you over here. Let me get this out of the way because if not, I'm going to forget about it. Because I started off as soon as we went to MNQ and then got distracted because the chart was not updated. This morning in the live stream, I told you about this gap right here. I'm not going to reiterate everything I said. So just go watch the stream. To save some time, just scroll through the video until you see me drawing this, and then stop the video and start playing it there. So that way it'll save you some time. I don't know what minute market it is, so it is what it is. But in here, I told you about how this could be used as a inversion fair value gap. And then while I was drawing it, it came up and used it here, came back down and traded into first percent fair value gap. We went through the process of creating a blow off type little run for traders to chase on the upside. And they took it all the way down in here. And I told you it was struggling here with this wick, but I would demand that it would sell off this candle and the next candle. And as I signed off, it went the other direction. Now, I'm sure trolls had a wonderful time about that happening, but I said that this was a barrier. This is not going to be easy to get through that. And why is because the bodies are not even coming down to consequent encroachment of that wick. So it could come back up into the range. It trades back up into this little inefficiency, and I started adding shorts in here inside this wick. And I added in this run up in here. And I was looking for sell side there, sell side there. I got that. And then I had an order to take out a run below there, but and it came back and stopped me out. I made my stop loss public. And that's one of the things I absolutely hate doing it, because if the roles were reversed and I was Phil, I'd be doing a whole lot more than he does it to me. I'll just be honest. I'd be doing it all the time. I'd be watching every time I streamed, and I would be monkeying around with me all the time. But it is what it is. So what are you trying to say, ICT? I'm just saying what I said, and we'll leave it at that. So the market rallied up into this gap here. I felt very confident about how we were going to go back into the range once we went above that buy side liquidity pool. We had a little bit of a run here, and then back inside the range as I was anticipating it would do it. Well, after getting stopped out later in the day, all of this here is time distortion. Okay, all of this in here, time distortion. And I tweeted that that time distortion would be rectified and cleared up if you went to a 5-minute chart. Okay, so just for visibility, I'm going to take this right here off. That's the first percent of fair value gap at 9:35. Why did I pick this one? Some of you were commenting on the live stream this morning as why did I pick this one here? Well, first you have to remember, how did we open up the day? Premium gap. So when we have a premium gap, I want to see price try to get down towards that gap. That's the first order of business all the time. When we have a premium gap, I want to see price trade down. What's a premium gap? Opening higher than where we settled previous day in regular trading hours. So this is a premium gap. Find consequent encroachment. That's that level right there. So for the first 30 minutes of trading, that's the opening range. First protocol is anticipate that happening. Whether or not it happens, that's the first thing in ICT's mind. I'm looking for that. Now, how do I incorporate that with the first presented fair value gap? You'll see this in the book, by the way, and this is the reason why I'm saying don't buy my books. Okay, I'm writing the book simply because I want it in my own definitions. Because too many people out there watch my stuff and they want to pretend they created something on their own. They just found the model themselves, but they're using my terms. Make that make sense. So the books are not necessary for you to buy. Okay, so I'm teaching it again here. Everything's in this YouTube channel. You do not need to buy books. I'm not trying to get rich off of books. Okay, I'm writing them because too many people's already wrote books with my stuff, and it's incomplete, or they've done a terrible job with it. So it is what it is. The idea of creating a fair value gap towards the opening range gap. Think about it. Okay, we gap higher here. So first protocol is find mid gap, consequent encroachment there. In my mind, I'm looking for something to formulate in a structure or framework to lead to that drawdown into that particular price level. Not a zone, not some ambiguous thing, that particular price level right there. That's what I'm looking for. Best case scenario, full gap closure. But I don't want to have best case scenario. Why? Because it might not deliver that. It could leave this gap partially open entirely this week. That's what could happen because of the climate. Obviously, we know it closed later on in the day, but because of how we're trading and what we're up against in terms of the technicals and the geopolitical things going on, you have to have a low-hanging fruit objective, okay? So low-hanging fruit objective would be obviously the opening price or the lowest of that first minute candle. So when it opens up and it's running up here like that, I'm anticipating very minimum trying to get back to the gap, consequent encroachment by 10 o'clock. I'm not hardlining it. I'm not saying it has to be by 10 o'clock. I'm just saying there's a 70% chance that it's going to do that. Now, you keep keeping track of the data and you keep formulating a cumulative total of how many times it does this. That's your job for the rest of your life as a trader. If you're going to trade indices, do that. And I'm confident that you're going to, over a large sample set, you're going to see that 70% of the time, the first 30 minutes, half gap gets traded to. Now, that's a huge advantage for bias for session. Bias for session, not daily bias. It's the what to do right now. Okay. So at 9:30, it opens here, starts ripping higher. We already have a built-in advantage that it's likely to go down into the opening range gap. Minimum low-hanging fruit objective would be 9:30 opening price or whatever the low of that candlestick is, because that's where engineered liquidity is. There's no trading there on regular trading hours yet. Electronic trading hours, it's been there, but regular trading hours has to book it. That's the efficiency model that regular trading hours implements. Whatever electronic trading hours is done, that's fine and great. Globex is fine. But regular trading hours has to book that price. It has to do that. That's the efficiency model during regular trading hours. That's what the algorithmic scripts are doing. That's what they're seeking to accomplish. And that's why this stuff works. That's the why behind it, okay? So sell side below this low, that's the low-hanging fruit objective. Midpoint of the opening range gap is consequent encroachment. 70% chance by 10 o'clock it can trade there. That is not 100%. It just means you have a high degree of probability it's going to trade there. Now, what do you think that means when price is trading higher? Let's go back into a electronic trading hours. When it's trading higher like this, right from Jump Street at 9:30 here, when it's rallying up here and it's taking out buy side, it runs that minor buy side, which I talked about it as soon as we got on the MNQ chart this morning on the live stream. I was thinking 45 seconds late getting to it. But it takes out the minor buy side here. I said that we would take out this buy side, which is over here, at these relative equal highs, and this one here. So it ran through both of them and then gave up the ghost, went lower, took out the low of that first minute candle, and then didn't get to consequent encroachment of the opening range gap, but it did take out that low. Then rallied up and cleared a higher time frame pool of liquidity. Over here is the fair value gap that I told you that, and I'm not going to tell you all this here because I did it in the stream this morning, but I used this idea here that it could trade up there and use that as an inversion fair value gap. Hits it, trades down to a little bit there, and then they pump it one more time. That's Phil. Who is Phil? Phil is the guy that can push a button, slide a little dial here, turn a little knob there, and cause a little bit of chaos. Okay. He cannot do it all day long because the market, it would be so obvious then nobody would want to trade. But when it's convenient and it's at the opportune time, you'll see these types of things happen. Okay. I've proven to you in live stream when it happens. Okay. I call it out and I'll say, there's Phil. Phil's not his real name. Okay. Let's put it that way. But it's just my little jab because I know when it's happening and it's for us to understand what's happening. So that's my way of telling you this is tomfoolery, this is manipulation, this is manual intervention. Okay. Don't put too much stock in what that just did. It's probably a aberration and just ignore what it just tried to do and many times fade it. So that way you now have a definition of that. So I know a lot of you guys do little clips of what I say and you put music behind it and whatnot. Make me sound like Alan Watts, which some of it's kind of cool. You want to make a clip of that, what I just said there, okay? Because everybody wants to know who Phil is, what that is. I just gave it to you. So that way, hopefully, when it gets all across your YouTube channel, everybody's sharing it around everywhere. I won't get inundated with that question all the time because I get it all the time. Okay. Michelle, you got your answer. So there's the run up. And I said, I like that. Okay. I didn't call it um, manipulation at the time, but it was happening so quick. I said, I like that. And we're going to pull back into the range. And we watched it trade down. And I told you, I want to see it go below the low of the first percent fair value gap. Then I want to see it build up momentum. And then we got into this wick. And I said, that's going to be formidable. It's going to be a challenge for it to get through that. And it did. I demanded if it was going to go lower, it would either happen on this candle or the next one when it was trading that one. And it didn't do that. It went the other direction up into this gap here, which is the wick. That's this wick right here. And widen it out so you can see it again. See it? I believe there was a setting at one time, and I don't know how to do it now, but there was a setting on TradingView, and I'm not sure if it's still available, where you can like make the wicks or the bodies a little bit more pronounced, a little bit more. This to me is too thin. I would like to be able to make them a little bit more thicker. Like I have aging eyes, okay? And in the live stream, a lot of the times when I'm showing things on X, like if I record an execution video, the wicks many times are hard to see. And that's the reason why I went back and I'm struggling because I'm looking at a brighter background than I'm usually accustomed to. On my big screens up in my office, I have filters that they're very expensive filters I put over top of all my monitors. So it's very comforting for me to look at the white behind that. But because a lot of complaints come in and they say, I can't see the candlesticks wicks, I don't know what I'm looking at. And I'm trying to be the best teacher I can possibly be. I know that there was a setting at one time where this could be thickened up and much more bold. And I don't know how to do that now. And I did it before and I don't see it now. And maybe it's just placed in a different location or maybe they removed it as a function. I don't know. But TradingView, if you did remove it, please put it back. Okay. Because I would like very much to be able to implement that because it's too thin for me as an educator to be able to make illustrations and feel comfortable looking at the chart when it's populating it live on live streams too. But when it created that and traded down in here, I mentioned later in the day that I felt that sell side was, basically being. It was an obvious. It was gonna trade down there and get it. So where was sell side? Sell side's below here. Sell side's below here. And ultimately, you've seen the trade. I was doing screenshots because I didn't want to record anything because now live streaming is so much easier for me. I don't want to edit anything. So I'll just you know, do screenshots, prove that it's not market replay by toggling this thing up here. Anybody using market replay will not be able to do this. You won't see that. Okay. It'll be something else. I don't know exactly what it looks like. This green ball goes away and you can't show live functions being shown at the same time. I think I've earned the right to be able to show screenshots. Okay. It's much more efficient. It's quick. You guys get it like a text message from me. So if I'm managing a position, and admittedly, that was a demo trade today. I'm 1 day back from over a week away from price action. So I did not use AMP. I did not use a live account today. This is me trying to get in sync, trying to put myself in a situation where I care a little bit more about the outcome. It helps me focus a little bit better. But two pools of liquidity, that one here, and then a stop loss. You watch me trail down and end up hitting it. It went back to first percent to fair value gap. And while we were in this little area here, I'm going to take this off because we've already talked about it here and here. While it was doing this, I said that, the 1 minute time distortion right here gets cleared up if you go to a 5 minute. So I'm going to take this off as I was saying earlier that got distracted. This is now off. So we're going to go to a 5 minute chart. See this right here? See that gap right there? Let me add the first percent to fair value gap, but we're going to come back to the 5-minute chart here for the 10:10 a.m. Okay, but let me go back to the 1-minute chart so that way everybody can see this and I'm comfortable about what I'm outlining here. The 9:30 candlestick this morning. So I'm looking for, and then now first percent to fair value gap, 9:35. That's just a marker, okay? Don't worry about the color. It has nothing to do with it. It's just a place marker for me. So when we go back into the 5-minute chart, you'll see what I'm referring to. It's set to only show the 1-minute chart. ICT, you gotta get better with this live streaming stuff, guy. Like this is ridiculous. You're wasting my time now. No refunds, bro. No refunds. All right, so let's do all intervals and then 5-minute. There we go. So there's the first percent to fair value gap there. So we're looking at that range. But now watch what happens. We have this buy side and balance, sell side efficiency right here. That candlestick's open, comes in at 355 even. This candlestick's close, 355 even. So there's no volume imbalance there. So this gap is just this wick to wick. Now extend that forward. What price was simply doing is utilizing the volume, the inversion fair value gap rather, of price action there. What's going on here, man? Okay. So now this is on here. You'll see what happens later on in the day. You can already see it here, but drop down to the 1-minute chart. Look at this. Look at this. Talk about Phil and he shows up. He already knows I'm going to talk about this in a couple minutes. All right. So we have the 5-minute inversion fair value gap. Look where the bodies are. Are the bodies touching the high of that inversion fair value gap that's anchored to the 5-minute time frame? No, it's not. So yes, the wicks can color outside the lines. It can do that type of thing. And when you're watching price action, this can make you nervous. This is the part that you're supposed to be doing when you tape read. You get acclimated to it. You get comfortable with it, doing it. Just like I use the analogy all the time. If you have a son or a daughter who's just now starting to learn how to color, and they have a coloring book, and you say, sit down and color daddy or color mommy a picture, and they have the crayon and they're coloring it, and they're coloring all over the place, and they bring it to you and say, look at this, daddy, look at this, mommy. What are you doing with it? Are you smacking them outside their head, say, what you just messed this up for, you fool? You're not doing that. You take it and you put it on the refrigerator, or you take it to work and you put it on your little post board next to your desk. Okay. If you're a mechanic, it's in the shop where you can keep looking at it. And that's your reminder that you want to quit, but you can't because that's what you have to take care of when you go home. So coloring outside the lines is permissible. It doesn't make you hate it. It's something you got accustomed to seeing. The body's not touching the high of that inversion fair value gap is the signature. That's the algorithmic signature. That's the big neon sign, the billboard sign saying, hey, hey, look at me. I'm not posting a body to the high of this. Something's happening here. Now, if we go down the rabbit trail of myths and fables of buying and selling pressure, they'll try to convince you that price action just so happens to be buying and sellers are agreeing that, hey, look, some random level like this is causing the bodies to stop and not touch the high of that box that I showed you on the 5-minute chart. This clears up time distortion because you see what they're utilizing. When that 1-minute chart sloppiness in here was happening, all it was doing was showing you that the bodies aren't even touching consequent encroachment. It wasn't doing it. So what is it going to do? It's going to go for what they left, sell side. Okay. So it moves lower after trading in here. The bodies can't even touch the halfway. I'm going to take the first percent of fair value gap off just so that way we can focus on the same thing of the 5-minute inversion fair value gap. So this 5-minute inversion fair value gap clears up 1 minute time distortion. The rule is if you're seeing shared ranges in the candlesticks on the time frame you're looking at, go up a time frame. And you'll see it's just simply utilizing a higher time frame inefficiency or PD array. And that's what you're seeing here. Now, just simply knowing what that PD array is, but wait, by the way, I know this is a little bit longer video, but let me know that if I'm boring you. If you're learning something from this, let me know on X right now and do the thumbs up on the video. It doesn't make me any more money. It just means that I'm giving you something that's valuable. Okay, because I had a goober post on the this morning's live stream and literally said none of this stuff works and it's all crap. Come on, man. How are you gonna do that when I'm literally telling you what's gonna happen, what PD arrays is gonna use, and it does it? I told you it was gonna come back into the range. I told you it was gonna do all these things today, and it happened. But yet these things don't work. Make that make sense. Like make it make sense. Like I could understand if I was doing it and it was all wrong and it never worked out. And then obviously that would be comical then. But to simply say no, none of this stuff works. Yet I'm showing you it works every time I come out here. This stuff's working. The PD arrays I'm pointing out. It's not like, oh, there's so many gaps. Eventually it's going to hit one and it's going to do something. It's only the ones I'm telling you about. That's the part you're supposed to be paying attention to. But now let's get back to the lesson. If it's going to use this 5-minute inversion fair value gap, the logic that I teach, real institutional overflow, that you can visually see, they cannot hide this from you. Okay. Phil cannot do this every single candlestick where he goes in there and messes around with it. Okay. Nobody would trade then. So by having these inefficiencies understood and outlined, knowing what those ranges are, we're in 1-minute consolidation. It's chopping around. The chop is real. Everybody's going to be complaining in their live streams saying, what's going on with this market? Why ain't he doing this? And why is it doing that? Why are you doing this to me, NQ? Why are you doing this to me, NASDAQ? You know who I'm talking about, right? So this sideways consolidation gets cleared up by going to a 5-minute chart. And that range, that inversion fair value gap is here. So just simply knowing what that range is not enough. It's not enough. So I tweeted this morning, I said, what did they accomplish and complete this morning? They ripped it higher with a premium gap opening from 9:30 opening bell. And then here is the previous settlement price. That's this level down here. So that's the opening range gap low, regular trading hours opening range gap low to opening price at 9:30. So that's regular trading hours opening range gap high. What makes it high is because it's higher than at 9:30 than where we settled at the previous day. And previous day, let's go back to regular trading hours real quick. Regular trading hours settlement previous day because they did not open the markets on Friday because they mislabeled it as Good Friday. They should have closed the market at Thursday because that's Good Thursday because Christ was crucified on a Thursday. This is a higher gap opening on Monday. So the last trading day, Thursday, settlement price, 414, then reopening on regular trading hours. That's a higher gap opening. So that is the opening range gap for regular trading hours or RTHORG, opening range gap, high because it's higher than the previous settlement. Okay. So that's the opening range gap or regular trading hours, RTHORG, low. And then you split that range in half to get consequent encroachment. That's your target for the first 30 minutes of trading. 9:30 to 10 o'clock. That's what you're looking for. You're looking for price to gravitate back to this. That's everyday operation protocol. That's a SOP, standard operating procedure. That's a 100%. I'm looking for that every single day until proven it's not going to do it. Okay. So you want an everyday thing. That's what you're doing every day. You're looking for something to set a run towards that direction. Whether it hits that level or not is irrelevant. Absolutely irrelevant. It's just that's your first initial draw. That's what you should be doing. Okay. So again, with that said, here we have it. bodies can't even touch consequent encroachment of that. Okay. And go copy my tweet, and you'll see when I made that tweet, then we get this drop down right afterwards. Don't take my word for it. Copy the link to the tweet, and then go on the chart on TradingView, right mouse button, click on it, and click paste. Okay. Or as I have down here, I have the little toggle here. I have that part of my thing. I'm going to remove it because I actually prefer just right button on the mouse and then pasting it. As long as I have copied the link, it'll populate and put the actual tweet right on the chart at the very minute marker. Okay. But they also offer here where you can click on it and then put the link there. To me, it's kind of redundant. Like just simply right click on the chart anywhere, and then it'll just drop that tweet or anyone's tweet. Okay. You want to be fun, have a real fun operation. Look at all these braggarts out there, these guys that talk a lot of smack. And if they post what they think is going to happen in the marketplace, just for fun, don't troll them. I'm not inspiring you to go out and troll people, but just to kind of like report card, because a lot of people have things to say about me, but they don't ever consider what I'm doing. Like I'm calling stuff as it happens, and I'm very consistent. I'm not blowing up in front of you. I'm not failing in front of you. Okay, so I've earned the right to be able to tell you what I think is going to happen in the marketplace, and apparently a lot of people listen. So the consideration is that we're sharing a lot of ranges here, and that's time distortion. So time distortion is cleared up by going up to the 5-minute chart. You get this imbalance. The bodies can't even touch consequent encroachment. That's real bearish order flow. And I said, what did it accomplish this morning? And who's profitable? The longs from opening, and then come down and stop them out. Then all this run up here. The breakout artists, okay, that bought the break above, old buy side liquidity. As I saw that, I said, I like this. It's going to pull back into the range now. It did. So longs have been bullish from here, and their net longs positions have stops below that low. What's below that low? Consequent encroachment of the opening range gap on regular trading hours. So in here, time distortion gets cleared up by going to 5-minute. 5-minute inversion fair value gap. Bodies are saying absolutely not ICT. There's your big morning sign. So now you can feel comfortable by tweeting. Look what they did. They ripped it higher, made it jagged on the upside. Where is sell side? Here. During the live stream, I told you it's going to pull back, and the opening range gap for regular trading hours is going to be a factor for later in the day. It's going to be drawn too. Failure to go to midpoint here is indication that order flow is now bearish. Absolutely. Look for lower prices. Lower, lower, lower. This gap I gave you during the live stream, it uses it here. Trades down below the low here. Doesn't get below this low, but trades to the rejection block. Lowest down close price. It does that there. Then pulls back up into that 5-minute inversion fair value gap. Trades down again, consolidates a little bit. It's during what time of day? Lunch. Lunch goes to what? 1:30 p.m. Eastern time. 1:30 Eastern time is here. So it can create the lunch macro all through that time between 11:30 to 1:30. That's your 2-hour window. We get back up in the deeper end of that 5-minute inversion fair value gap. We're trading up into it here, here, here. But look at the bodies. What is it telling you? You do not need footprint. You don't need market profile. You don't need level 2 data. You don't need any extra data. You don't need any kind of open, high, low, and close. Okay. Other influencers ask me all the time, hey, do you have level 2? Do you have level 3? Do you have level Area 51? I have open, high, low, and close. That's what I got. I have real time, open, high, low, and close. All that other stuff, all of it is nonsense. All you're doing is formulating another reason, just like gout, athlete's foot, or the last time you had tennis elbow. I bought things and it worked out. That's what you're doing. You're forming a religion. It's all it is. And you're welcome to do that. People believe the way the stars go around, and Saturn's in retrograde, and Uranus has a growth on it. You know, keep all that planetary stuff and stars and moon cycles, all that stuff. I keep it out of trading because it has nothing to do with trading. Okay, I promise you, the algorithm has no appreciation or respect of that stuff. Period. But when you look at where price is showing you, where the bodies are saying, no, we won't even touch the high end of it. Even though the wicks do it, the bodies are saying, absolutely not. We're not doing it. And then at a random time where no one would reasonably expect price to do something at 10 minutes before 1 p.m. Eastern time, then somehow the planets did realign. Somehow the effects of all the planetary cycles and rotations and everything comes together and price starts running lower. The market was made jagged on the upside. The sell side was the target. The opening range gap, regular trading hours, opening range gap. That's these levels here. That's the high of it. That's the low of it. That's the draw. Okay. This same gap I gave you this morning over here, it's used here to pump up into that. We trade through it here. Look what it does with it right there. Look, right here. Look at that. Isn't that beautiful? Trades through. One more time. Done. Trades lower. And I know some of you, well, it's because it's using this candlestick's low. Dude, I have so many people try to sell me that kind of crap. I want everyone that says that support and resistance stuff, I want you to use support and resistance and call everything live beforehand and do it every single day, every single week for the rest of the year. And I guarantee you mine's going to outperform it. I know the levels based on the efficiencies, the gaps, the wicks. I know what I'm looking for, and I'm presenting them to you in a live stream where I can't mess it up. Okay. Well, I can't mess it up if I do it wrong, but I can't go back and correct a mess up. I can't edit something. Okay. So it's not like I'm doing this with 12 different computers, like some jackleg tried to say. I'm doing a live stream. You're all watching it. I only have that chance to do it right. I have no other chance. There's no safety net. It either works or it doesn't work. Either I'm calling the right ones or not. So the run starts here at 1250. That's the 1250 110 macro time. It starts dropping off. We rally up into the high end of that inefficiency this morning. This one here, as it was running up here, it only trades up into this gap. And it can't even touch that inefficiency there. That's bearish too. So you would see this gap and then anticipate willingness to try to touch this low and maybe wick to the midpoint. That would have been permissible during that time, but couldn't even do that. What does that mean? It's weak. So if it's weak, it's heavy. If it's heavy, it's going lower. Where's it going to go if it's going to go lower? Here's the high of the opening range gap for regular trading hours. Upper octant, upper quadrant, octant, consequent encroachment, smashes through that all the way down to full gap closure, and just for good measure, overshoots it a little bit. Now watch. Once it does that, we start trading higher. This right here, this inefficiency, low, volume imbalance. Take your chart, not mine. I'm not going to do it for you here. Run your quadrant levels on this here and study this on a 15-second chart in here. Price runs back up, back into some random level in the first presented fair value gap. Octant. Look where the bodies are stopping. Isn't that interesting? Trades lower, uses that same gap again here. Bodies don't touch it on the closing basis. Only the wick does it. We trade lower and then trades down into what? This inefficiency. This is your what? Inversion. Sell side imbalance, buy side efficiency. We trade above it. It's going to come back down into it. Octant. Zoom, zoom. Uses that same fair value gap again. It's probably random. And then we move into this. All of this sideways consolidation. and runs right up into that gap I told you this morning live. Look at that. Seriously, tell me why. Tell me why using anything else, support resistance stuff, okay? Tell me why it did this and then sold off. You're not going to find it. It won't happen. You have the benefit of hindsight and you still won't be able to do it. I promise you, every ICT mentor out there never would have gave you that level. And that's why I get offended when they sell my content. Selling my content is just it gets under my skin, man. It gets under my skin, and I might love you as my student, but it's like a piece of meat between my teeth that I can't get out, and my tongue keeps going back to it because you're selling something you don't fully understand. And I'm just going to say it again like that, and we'll just leave it there. But look at the bodies. It can't even touch consequent encroachment that wick. I'm sorry, that gap. This gap, remember, it's this that I showed you this morning in the live stream. Go back and watch this morning's live stream and the logic I used here because this was a run on liquidity. But everybody that talks about liquidity, like I made that word a buzzword in 2016. Everybody from MLL company teaching people to the average person on the internet, they all started talking about liquidity, liquidity, liquidity. And not every one of these people understood what real liquidity is. Okay. It's the truth. Um, I'm going to go there. Even Chris Laurie, he talks about liquidity back then, and he didn't fully understand what he was talking about either. That's why I tell you, listen to me. Listen to me, because I'm talking in a language and a vernacular that no one ever used before. I might use words that are going to be synonymous with the industry, but what I'm doing with them, no one's touched it before. No one's ever considered it before. Because if they did, they'd be doing it. Okay, they wouldn't be able to. Let me say it this way: they would be able to find the logic of this in something else. And I did it in a live stream, telling you, watch that level right there. And the logic is it was running liquidity, and it need not take this high out of that wick because the wick's an inefficiency. Okay, just go back and watch this morning's live stream. You'll see why I picked that, and then look at the magic over here. The logic I teach with real institutional order flow, not the garbage of looking inside of a candlestick, look inside of a range or a bar, and what price the majority of people buy at. Who cares? I don't care how many people bought at that opening price. I don't care how many people sold at that price. I didn't even bring that up at all in the live stream when I chose this inefficiency. Think about that. And yet, the logic that I teach, this is why it's not supply and demand. That's why it's not anything else out there. And I beg you guys all the time because you look like fools. Every one of you constantly saying, oh, it's rebranded. This is not rebranded. And I'm twisting the knife, not because I'm insecure. I'm doing it because I want you to understand you're wasting your time. And the people that sit here with me and watch me do this, you're never winning these people over because they watch me do it beforehand. And $5 million says you don't know anything. Because if you did, you'd come forward with the sources I'm supposedly rebranded from. You'll never see this logic found in anything else because it came from the Father. That's where it came from. So the point is, the logic I teach for institutional order flow is that if it's bearish, if it can't lay a body on that midpoint or consequent encouragement, that is indicating what? It's not strong. If it's not strong, it's weak. If it's weak, it's heavy. If it's heavy, it's going down. Gravity takes over, pulls it down. Low, higher low, sell side below there. Inefficiency there. Also, see that volume imbalance? Volume imbalance to that high. That's your inversion fair value gap. If you were looking for multiple different models, if you like volume imbalances, as soon as it traded up into that right there, fine. But the stop loss would have to be above that high. Why? How could you trust that? Because it already gave you the indication that it's already heavy here because it can't even put the body up against the consequent encouragement level. It wicked from open up and then closed immediately outside of it. The next candlestick opening here, you can go in that candle right away and just start selling short, 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 short. The next candle when it opened up here, wait for any candle that makes a run back up inside this here. That candle right there, you may or may not have been able to pull that off because it could have happened pretty quick. And then look how fast it dove out of there. Beautiful, beautiful price run. Like that. That's low resistance liquidity run conditions. When it does those types of runs, that's what I'm training you to find. And when they form, they are always 100%. Listen to me. They are 100% always originating off of what I teach as a PD array. It's never some random thing. Okay. And if other people's stuff that's trading retail, if it just so happens to agree with what I'm teaching, that's when their stuff in retail works. It's rare when it happens, but that's why retail stuff works. When it's on the same page when my stuff says it's going to do it. Largely, it's not going to be. Many times it's an arm wrestling match between what retail thinks and versus what I'm telling you the market's going to do. And I want to trade when retail can't see it coming, when they're blindsided by it. And I have lots of things that helps me do those types of things where they get wrecked and I can see things before it happens. And it's just beautiful, beautiful advantage. It's like literally bringing a nuclear warhead to a knife fight and you're using plastic butter knives. It's just literally there's no competition. You're literally getting melted, eviscerated, vaporized. So anyway, look at this right here. Buy side. Okay, buy side. Right before that buy side's taken, what did I teach you to look for? That gap that's formed before the buy side's taken. This is also reversed when sell side's taken. If you're learning anything, give me a thumbs up and let me know. I'm loving this ICT. I'm learning. I'm like a sponge. Keep sending it out. I'm drinking from a fire hose. I don't care. I'm taking notes. I'm teaching right here, bro. If you're not writing this stuff down, you're wasting your time. I'm not wasting my time. I know this stuff. Buy side taken, the inefficiency right before it happens. There to the volume balance high. What do you got? What do you see? Are the bodies able to lay inside the upper half of that? Nope. So is that order flow bearish or bullish? Is it bullish or bearish? Come on, tell me. Bearish. And then what does it do? It dives lower. So what is it using over here that's support and resistance? It's not. You're going to say it's using this? Let's borrow that for a second. There's your old high that you got to cut through all this stuff. That's not something that support and resistance people are going to do. But let's just say that's what they're doing. Does that look as clean and it's perfect as what I'm showing you here? It's using that inefficiency and then the logic of stay out of the upper half of the bodies. But there's no algorithm. Come on now. You gotta love it, right? You gotta love it. I'm not trying to convince you. I'm just twisting the knife for the people that don't want to believe it. You're watching me and you hate it. You're like, oh, you're just cherry picking. Yeah, how about it? And then we sell off. Okay, so anyway, let's just take a quick look at Bitcoin, and then I'm gonna wrap this up. I've had a lot of fun with y'all. I'm probably gonna be up all night now because I got a little bit of a sugar rush from all this. So daily chart, let's see what we got going here. All right, so Bitcoin has done a little bit of a consolidation all last week, which I told you that could possibly happen. And there's a gap. It should be on that candlestick. Why is it over there like that? There you go. So we traded up into that today. Now we're sitting here. So I would personally, if I was in Bitcoin, and I'm not, I've never traded Bitcoin, I've never traded crypto, I'm never going to do it. But if I were, I would be very, very interested in seeing this really try to make a move lower. And we have buy side here that we just traded through today. We're up inside this fair value gap and wick. See that wick right here? That wick with this fair value gap that's that's formidable. So if it can manage to get above that, I will concede and say that I'm probably wrong on the near term, and going to this low here or consequent encroachment of that wick is probably not likely to happen so soon. I still think it's going to zero, and I don't mean that to be funny. I always wrap it with some sarcastic humor or whatever, but I'm absolutely 100% convinced that this thing's going to be it's going to go away. And I know you can't imagine that happening, but I've been in this market for a long, long time, and I've seen things that look like perfect stocks that's never going to go away, companies that will never go away, commodities that I used to trade, pork bellies, they went away. So I mean, come on. So I get it. You're in love with it. You have all your faith and trust in it. But to me, you're in trouble with it. Okay. You've married the idea, and you have all these other tech people that are trying to convince you that it's the savior. It's the last bastion escape from fiat, but it's got hooks in it now. As soon as they put it on the futures market, it was owned. So just know that if this thing starts to roll over here, okay, and stays below this inefficiency and this wick. So that would be more like that. There you go. Okay. So that's the wick, and it has that gap included there. So if we stay below this, it should start to roll over, and you got liquidity here, consequent encroachment on that wick. If it lays a body at that level right there, then it's going to go through this and explore lower. Lower would be 49,577. And then the nice round number of zero eventually, but 24,756 is another objective I think is pretty nice. Remember, I can't make this market go down. I don't believe the stuff you guys believe as a religion, fear, uncertainty, and doubt. I think it's what you call FUD. I'm not FUD. I'm not Elmer Fudd. Okay. I'm just looking at things from a technical perspective, and nothing in here looks terribly bullish. So I think that we'll likely see this eventually. I would like to, on a near term, like right now basis, I would like to see candlesticks really start. And there's our time that we got to close the live stream. I was going to go into it, gave me that warning. The idea of wanting to see it trade lower now over the next couple of days, I would want to see it do that simply because we have all that's needed right now, technically, as like a last kiss goodbye before the train leaves the station and goes to Southern Town. Okay, and it's below here. So that's what I'm kind of like looking at. I want to see it start to move lower because of it being what it's doing right now, where it's traded to, is enough to facilitate lower prices. If it nixes that idea and just simply says, "No, I don't think so," I'm probably wrong, and it may want to explore again a run into this range a little bit deeper and take out that buy side. And then I don't know at that point. I'll have to look at it if it does that. But right now, I like the idea of it rolling over and going lower and getting to consequent encouragement and taking out that low. If it takes out that low, I think it'll be rather quick getting down into to 49,577. And then I'll have to revisit that should it trade there and give you my next bit of business. I don't want to come back to this Bitcoin thing unless something like I just outlined here, one way or the other, happens. So if it starts to roll over, it gets down to this level, then I'll start talking about it again. But I don't want to keep bringing this up. I get too many requests for it. I don't care that much about it. And I understand a lot of you trade it, but I'm wrong a lot about this one. So I just want to be more surgical about when I talk about it, like I did back here. And there's where we're at. So when it's event driven, I'll talk about it. I don't want to be on a day by day basis with analysis with it. So that's going to be it for today. I hope you learned something. I hope you had some kind of epiphany from what we covered today. Hope it encouraged you. I know I gave you a little bit of a downer about what might be coming our way, but let's all hope I'm wrong. Okay, let's just hope I'm wrong in that regard, and none of us have to endure any of that stuff. And until I talk to you next time, hopefully, Lord willing, tomorrow morning in live stream, I'll join you again around 15 minutes after 9, and I'll talk with you then. Until then, be safe.